What if I told you there is a strategy which can actually double your capital in a single day? Yes, you heard it right, that there is a BTST strategy that is buy today and sell tomorrow, through which you can actually double your capital by simply using nifty call options. Hi everyone, this is Akash and welcome back to your own channel where we talk about different stock market strategies, systems and trading ideas. Now, in this particular system, what we have to do is we have to first select two indicators and change their settings. So let us look at what are the indicators that we are going to use. The first indicator that we have to use is called as stochastic, right? So just click on the indicators tab and select stochastic and it will be applied. Now you have to change the default settings of stochastic to the values that I'm going to show you as of now. So these are the values that you need to deploy on your stochastic indicator. So the input parameter has to be time frame equal to chart, where the time frame that you will keep will be equal to daily time frame, right? So I know you people already have an idea about what are the different time frame. So just change the time frame to the daily time frame. The k percentage value has to be kept equal to 10 and the other 2 percentage has to be kept equal to 1. Now understand that I'm not going to explain what the stochastic indicator actually is in this particular video. Probably if I get good comments, I'll probably make a separate video to make you understand what is stochastic indicator. Now, after that, you need to click on the style button to define how the indicator will look on front of your screen. For that, just simply click on K percentage, upper band and lower band. Background, if you even uncheck, that is still fine, not an issue. The upper band has to be kept equal to 80 and the lower band has to be kept equal to 5. Once you do this, then this is the kind of indicator which will be shown in front of your screen. Now, over here, there is one extra thing that you need to do is that just place a horizontal line on the stochastic indicator, keeping its value equal to 3.5. As we move ahead in the video, I'll let you know what is the application part of this horizontal line. The second indicator that you have to deploy is your simple moving average. Now over here, these are the settings of your simple moving average. The length has to be kept equal to 200 and the source has to be equal to close. That is, this moving average will calculate all the data based on the closing price of that daily candle. Once this particular thing is done, your setup is actually ready. Now, once your setup is ready, the second thing that you need to apply or understand to deploy the strategy are the rules of that particular strategy. So let's understand what are the different and important rules for this particular strategy. So the first rule for the strategy says that you have to take a trade only and only when the value of stochastic becomes lesser than 3.5. So unless and until this value of stochastic is not going below 3.5, you cannot actually think about deploying the trade. That is the first and the most important rule you have to keep in mind. The second rule that you have to keep in mind is that the price value of the index, that is the closing price of the index, should be about 200 SMA. This primarily means that the primary trend of your index needs to be positive. But there is also a minor exception to this rule, that is sometimes this particular value of closing of your index can be also below your SMA, that is simple moving average, but it should not be beyond minus 4%. It can be in the range of plus 4% or minus 4%. And I have seen that the best results have been getting only when the index is about 200 SMA and it is very close to SMA. That is, it is trying to take a support near SMA. That is the point where the probability of this particular strategy working out increases dramatically. But let's say if indicator is price is even below SMA, but not below 4% from the SMA, then still you can deploy this particular strategy, but the probability will be less. So just keep these things in mind. The third rule says that you have to buy call option at 3:20 p.m. when the stochastic is lesser than 3.5. So let's assume you found out a day where the value of stochastic has gone below 3.5 on the daily time frame. On that day, you have to patiently wait till 3:20 p.m. That is just before the market closes, you have to go and buy a call option. Now, why till 3:20? For a very simple reason that we'll be able to get the lowest price possible for that particular call option. The fourth rule says that select the at the money strike price or near at the money strike price, because if we go into the far OTM strike price, as an option buyer, this might not be very favorable for us. So it's better to go for at the money strike price or near at the money strike price, which might be just slightly OTA. The fourth rule says that close at the 3 p.m. of the next day or 30% premium loss. Now, it simply means that let's say we initiated the trade on Monday, right? We initiated the trade on Monday. Then you have to close this trade on Tuesday. At what time? You have to close this trade on Tuesday at 3 p.m., right? That is in profit. At 3 p.m., I have tested. It is mostly closing in profit, and it will be giving actually you a return of around 80% to 100% depending upon that day's momentum. But this is what is you have to do in order to book profit. So in order to book profit, you have to wait till 3 p.m., or as soon as you get a profit of around 80 to 100% of your deployed capital, it's better to book your profit. For the stop loss, you have to keep a stop loss of 30% of your premium. So let's say if 100 is your premium, then your stop loss should be of 30 points at least. That is what I mean to say. So tomorrow, that is, let's say you took a trade on Monday, and on Tuesday morning, if you saw a loss which is around 30% of your deployed capital, then probably it's a good idea to close the trade, right? So with this part, I think the rules are already very clear to all of you. In case if you have any issues in understanding the rules, then do comment in the particular section so that I can help you in order to resolving the issue. The next part that I'm going to show you is how to actually apply. So let's say once you apply this, all the indicators part, that is over here, we have stochastic, and this horizontal line over here, blue line, is nothing but your 200 SMA. The next is how to actually apply. So you can see on this particular day, that is 24th of September. So on 24th of September, we can clearly see that the value of stochastic was lesser than 2.5. That is, it was around 1.85. So this was a day where we have to actually deploy this particular strategy. And the EMA, the closing price, that is the closing price is over here. It was also near the 200 EMA. Like I said, this is your 200, not EMA, sorry, SMA, 200 SMA. So we can try to initiate a trade at the end of this day around 3:20 p.m. So let me just show you. So see, at this point, we can easily see the value lesser than 3. That is, the value was 3, well, lesser than 3.5. That is, the value was 1.85. And it was, the price was also about 200 SMA and even near to 200 SMA. Hence, the probability of the BTST trade working is very, very high. Now, let's say we deploy the trade. Now, when do we deploy the trade? We deploy the trade at 24th of September. On 24th of September, around 3:20 p.m., that is 10 minutes before the market closes. And what we have to do is we have to buy at the money contract, right, of call option. So let's do this into simulator. So over here, I have selected this expiry, that is 1st of October. Now, why, you may be wondering. So understand, the day we have selected is 24, but 24th was actually the expiry day. When I backtested, I found that 24th day was actually expiry day. So it is very obvious that we have to select an option of the next expiry. So that is the reason I have selected option which is of uh, which is having an expiry date of 1st of October. But the day on which we are going to initiate the trade is 24th of September. So this is the day on which I have initiated the trade, and this is the expiry date. I hope you get this particular idea very clearly. So let me mark it around. And the spot price on that particular day was around what, 10,803. So this was the spot price for Nifty. So if that is the spot price, then accordingly we have to select our at the money call option. So let us move ahead and let me show you. So this is the call option that we have selected. We can also select this particular call option. The reason I have selected slightly OTM is that the price will be lesser, so that we can actually buy at a lesser value, and this will be adding as an advantage to us in case market goes slightly against us. So 10,850 is the strike price that we have selected, and we have to specifically select call option. So the price at which we will enter is nothing but 3,130. And see, just take a note of that. This is the time at which we will enter. That is, we'll enter at around 3:20 of 24th of September. So the idea is very clear. We have bought 10,850 call option at around 130.10 paisa around 3:20 p.m, right, on the 24th of September, right? The next thing that we have to do is we just have to wait for the next day opening. So on the next day opening, what will happen is, you will see, as soon as this is the trade that we have created, and here we can see the maximum loss that we can get is around 9,757, which is equal to the deployed capital, because we are just taking a naked buy option, right? On the next day, that is on the 25th, what will happen on the 25th around 9:20, what we saw is that we were already into profit of around 1792 rupees, which also happens to be roughly around 20 to 30% of the deployed capital. Now if you're not comfortable waiting towards the end of this particular day, right, till 3 p.m., you can easily book the profit and call it a day, right? That is one good thing that you can do. But let's say if you wait towards the end of this particular session, that is till 3:20 p.m., not till 3 p.m. of 25th of September, then this is what kind of profit you will get. That is, you can see you can make, it's the same day, that is 25th of September, but if you wait till the end of that particular session, that is till 3 p.m., you can actually make a profit of 8,126, which is equal to 90%, or we can even say it is as good as doubling your capital. Now there are also many backtested results which I'm going to show you practically on the screen, so that you can get a real-time example of whether this really functions or not. But I hope by looking at all this picture, you get a clear understanding of the rules of the strategy and the setup required in order to use this particular strategy. If you have watched this particular video so far, then put a thumbs up, do give a like to this video, so that I come to know that you are watching and you enjoyed this particular video. Now what we'll do is we'll try to move on to the actual system that is on the TradingView website, and I'll actually try to show you how we can actually use this in real market, and I'll also give you a backtested result so that you get a proper understanding of the same thing, right? I hope the screen is visible to all of you, and we can actually, yes, I think so, screen is visible. So let me tell you how we can actually deploy. So I have already backtested this for a very long period of time. So let me just take one simple example. So see, there were so many examples over here. As if you see, whenever the market goes below 200 EMA and the same conditions are fulfilled, that is, stochastic is below 3.5 and those kind of thing, still it will actually not function very well. That is the reason it's always better to trade if the markets are about 200 EMA. Sometimes what will happen is, even if markets are, let's say, about 200 EMA, the strategy might give you some kind of loss. But what I have observed is that even when it is giving you loss, it will give you at least one or two attempts to close your trades at break even. That means the stock, the index, or the option that you have purchased might give a loss in the beginning, right? But at least it will try to approach near the break even levels, and probably you will get some chance to actually get out from that particular trade. So let's try and apply that particular strategy at this particular time frame. So we have selected daily time frame over here. This is your 200 EMA, sorry, SMA, and here is the stochastic indicator with the condition that I set to you. So on 29th of Jan, so let me just open the system, right? Okay, so on this particular day, that is over here, we can see the value. Let me just show you the value. Okay, so if I just click on this red color candle, the value is 3.27. Just observe the left hand side of stochastic, you can see the value is 3.27. So let me just write that value over here. So on this particular point, the value was 3.27 for the stochastic, which happens to be the first condition of our strategy, right? The second condition says that the closing price of the index should be about 200 SMA. So this over here is nothing but your 200 SMA, and we can clearly see that the price is obviously about 200 SMA. So this particular candle, right, was the candle on which we got the stochastic value equal to 3.27. So while the candle is actually closing at around 3:20 p.m., we'll try to initiate the trade, which will be nothing but taking a call option, buying a call option of at the money strike price. So in order to understand that, let's look what will be the at the money strike price for this. So if you just notice over here, so the at the money strike price, if I look at the closing price of this particular candle, is somewhere around 13,700, right? So let's see what will happen on this particular day, that is, uh, let me just check, that is 29th of Jan. So in order to verify that, let's go to option simulator. Now over here, let me just select the value 29th of Jan. So I think we can select 4th of February, right? Because 29th of Jan, if I'm just considering this particular, let me just confirm once again. Yep. So okay, so this day is, I think, is first of okay, let me just see. This is 29th of Jan. So if we are considering 29th of Jan, then definitely this is the expiry that which we need to select. So once we select this particular expiry, I need to select the date, that is 29th of Jan 2021. So let me just go as much back as possible, right? And this is the day, right? And the expiry for that has to be 4th of Feb. So let me change it, the expiry. Yep. So here we are having the expiry equal to 4th of Feb. So now we are all set, right? Let's check whether we are at a proper time or not. Towards the end, that is towards the closing, right? We want the data towards the closing. So I'll move ahead and come back, right? So let's see what is the value on 29th of Jan around 520, not 520, sorry, 320. So let me just hide the tools over here as of now. So on 29th of January, that is 320, we can see the price, the spot was around 1300 and 13,614. So let me see if that's correct. So over here we can see the price was, yes, the price was around 13,670. So which is very much close to what we are actually looking over here. On that day, what we have to do is we have to go and buy an at the money call option. So how do I know at the money call option? It's very simple. I'm just looking at the delta value. So this exactly is the call option that we have to purchase. So I'll just go and buy the at the money call option. Now, good thing about this particular strategy is that you just deploy one single lot, and that's more than sufficient to give you a good amount of profit, right? So I have deployed a call option, and this is the maximum profit that I can lose, that is 17,257, which is the value equal to the single lot. Now understand that this is a BTST trade, that means tomorrow, that is on the next day, that is whatever is the next day after 29th of Jan, you have to close the trade. You cannot wait till the expiry. So please take note of this, that you don't have to wait towards the end of the expiry, which also means that in none of the case you will actually lose all your deployed capital. Probably you might lose 30% or 40% or 20% depending upon how far away you are from the expiry. So please keep a note of that, that you have to close your trade whether in profit or loss on the same next day, right? Now with this, let us move ahead and see what happens. So this is 29th of Jan, and on the next day, that is this green candle, we saw that is 1st of Feb, we saw the green candle, we had actually a good gap up opening, slightly gap up opening, which was above the previous close, and then the markets went up. So let me just see what happened over here. So around next day, that is 32920 of 1st of Feb, this is the kind of profit that you are getting, that is 1241. Now this 1241 is roughly around 8 to 9% of the deployed capital. Now if I try to wait towards the end of this particular day, that is if I just keep on moving my cursor towards the end of the day, that is 3 o'clock, let's see what we'll be getting. I'm not changing anything. I'm not trailing my stop loss. I'm not doing anything. The idea, the rules are very well intact. We just have to follow them as good as possible, patiently. And as we move towards the 3 o'clock, this is the kind of profit that you will be getting. So this is the 29,700 profit that you made on a single lot. Guys, tries to understand, this is a profit made on a single lot, right? Are you getting? So this is, and if you just observe over here, let me just show it to you. If you just try to observe over here, this was the deployed capital, and this is a profit that you actually made, which is more than, I think, double of your capital, deployed capital. And that is what I'm trying to say. Now let me take you back to the screen on this particular part over here. So we can see, let me show you the previous data. I have verified it over here, it gave me profit, right? Again, I have verified it over here, it gave me profit. Then again, I have, see, these are the values which are below 200 EMA, so obviously we didn't have to trade on that. Then again, I have back tested over here, it gave me profit. Now this candle over here satisfied the condition, right? This particular, that is the stochastic was below 3.5. But like I said, there are certain exceptionals on which what you'll do is you'll see that though it is below 200 EMA, we can see the closing of this particular candle is below the 200 SMA, but still we will get the result. Why? And that is the reason I kept one more condition, that is if in case the price is within the 4% range above or below the SMA, then we can still deploy this particular capital. So here also it worked, here also it worked wonderfully well. right? So your capital will be actually increasing in the size by roughly around 80% to, or either rather completely doubling your capital. And this is how this particular strategy works. We can keep on testing it on multi. So I have tested it till around 2018, because that is the data which we are having in this simulator. And I hope you enjoyed this particular video. You learned something. Do try to apply, do try to backtest, and let me know what you think about this particular strategy in the comments. If you like this particular video, if you like the strategy, do comment in the video, do put a like in the video, and at the bottom of the video I'm attaching a simple WhatsApp group for those people who want to get associated with us and keep on learning more about options and stock market in general. So this is Akash S. Sawan signing off for this day. I hope you had a wonderful time. Thank you everyone.